Hello there, Maverick Traders. This is Rob Reinhold, joined by Ankit Sharma, and here we are, the second to last week of the year. Now, throughout the year, stock and options traders, they get lots of days off. Forex traders, we know the grind, but we do get 2 days off the market here. Next Monday, we'll be closed. And actually, Ankit, I cannot remember what happens on a Sunday. Are the Forex markets open on Sunday, or they close on Sunday too?
That's a good question. And, the funny thing is that trading all these years, I still can't seem to remember what happens around the holiday time. So that's a very good question. I think maybe things won't open on a Sunday because the currency market is actually closed on those holidays. Throughout the year, we don't see that, but for Christmas and for New Year's, we see that. So I think the markets probably won't open on a Sunday is my guess here.
Hey, why don't you check while we get this started here? All right, in this session,
Absolutely.
we are going to jump into what happened this week. Big week. Wow. And I said I thought this week was going to be a great trading week. It was so good. It was such a good trading week. But we're going to take a look forward. Is it still going to be a good trading environment? And then, of course, we're going to score everything from +3 to -3, and we're going to pair up the strongest against the weakest, and those are going to be our trades.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Both Ankit and I have been calling for substantially higher equities, and we definitely got that huge surge in equities. And this really came from the FOMC statement. The FOMC came out and they kept rates where they were, but the surprise to the market was what's called the dot plot. Now, the dot plot is a fancy name for all the Fed governors' projections for where interest rates are going to be in the future. So each of the Fed governors turns in their dot plot. But out of this group, there was a large group, I think 4 or 5, that had 100 basis points in rate cuts. That sent the bond yields down below 4%. That is such a bullish thing to happen to stocks that we saw the stocks react quite a bit. We also heard from the SNB, the ECB, and the Bank of England. They were all neutral, but the Bank of England actually was a little bit more hawkish than people thought. They had one more vote towards higher interest rates than people expected. The pound had a short-term pop on that, but really just gave it all back. And then the yen. We can't not talk about the yen. The yen typically is inversely correlated with equities. If equities go higher, yen goes lower. Well, guess what? The yen is on its own little path right now. There is speculation that the Bank of Japan is going to both hike rates and lift their bond buying scheme over this next meeting, which is Monday night. So we think there's going to be tons of fireworks from the Japanese yen. Other things we saw last week, US CPI. So US CPI, it came in a little bit better than expected, but no one cared because these are very acceptable numbers. 0.1% month over month on the CPI is a perfectly fine number, even if it was a little bit hotter than expected. We got US PPI that was weaker than expected. All the inflation numbers are going the correct way. We did get weaker than expected GDP out of the UK, and we already talked about the FOMC. One other thing to point out, Aussie and Kiwi news. So as you can see, the New Zealand had a much weaker GDP. The Kiwi weakened on this, but again, the risk-on trends brought it back up. And you can see a fantastic Australian employment report. So overall, again, a lot of central bank announcements, some weaker than expected GDPs, but really nothing all that surprising. And then, again, just so much news last week. That's why we thought this week was going to be just a killer week. Retail sales out of the U.S. came out better than expected. Unemployment claims better than expected. Chinese industrial production came out better than expected. We continue to get okay economic news around the world. Not great, but we have falling inflation numbers, which is very, very positive because remember, we've just gone through a big spike in interest rates because of inflation. And when it's coming down, those interest rates are going to come down with it, which is going to spur economic demand. So as you can see, the stock market loved the news. We've got the S&P and the world index both up 2.5%. We got gold and oil creeping up. Gold has had a nice run up. Oil has been terrible. This bounce here is very pathetic. Let's talk about crypto. Crypto rolled over. I don't have a good explanation for you why, other than it had a big run. But that's really about all I can say about crypto. We'll take a look at all the charts here in just a second. Look at this move that we saw in the S&P. Now, it was not surprising. I've had a couple of my traders, I had a handful of traders that were really fighting this move. And they were like, oh, I want to be bearish. This market's going to go down. And I'm like, guys, look at this high base. This means that there's people constantly buying any sell-off. They're not chasing it, but once this thing breaks out, it's off to the races. And this move is what we call at Maverick, a parabolic move. So a parabolic move is where it starts small, and then explodes to the upside. That typically happens because of short covering. This is very typical to what we see when we see a short covering rally, where the market creeps higher, and then it gets so hard to hold on to a short position that all the shorts jump in with all the other regular buyers, and you get these huge blow-offs. So again, this is a parabolic move. Typically, these parabolic moves up, they do end up with parabolic moves down. However, I don't think we're going to get that this time. Why? Seasonality. We're in the last 2 weeks of the year. There is no reason for anyone to do any sort of aggressive selling this year that they're going to have to pay taxes on next quarter. They're going to wait to sell till January. So I think we've got a little bit of time here. I think we got 2 weeks where the market has a really nice trajectory. That being said, we've already spent a lot of the gas. I don't think we're going to go substantially higher either. Ankit, what's your call on equities?
Absolutely. I'm on the same boat as you, Rob. I think where we are right now, again, no reason to sell. And, all the money that just came in this week, as we go to the closing of the year, you get money managers putting money to work. I mean, that's just what we are expecting. But I doubt that as we're getting so close to the New Year's that we'll get more of that. I think we're in a very sweet spot. And whenever you're in a sweet spot, nobody, is making changes to the portfolios. And that's just where we are. When we go into January, it's a whole different ballgame then. So I think as we discuss the next week and the week ahead, those 2 weeks, not expecting a whole lot of volatility in the markets, not expecting a whole lot of changes in the markets. So we probably just hold on to the gains and just close the year on. I mean, markets already adding on to the already really big month of November and now adding in December. So I think we got to wait for that. So pretty much, happy markets till then.
Yeah, I agree. And I think we might even get a little melt up of another 2-3%. So my outlook for these next 2 weeks is flat to higher. I don't see any reason for people to sell. Let's take a look at the Forex numbers. There's that yen. We've liked yen long. We continue to like yen long, but all of this buying has been in anticipation of the Bank of Japan this week. So all the reasons we've liked the yen long, they come to a head on Monday night. So if the Bank of Japan doesn't come through with what everyone has been expecting and put bets on, this trade could unwind. Dollar. Look, the Fed came out. The Fed, whatever the Fed said, really killed the dollar and interest rates. If interest rates stay below 4, this dollar has a lot of ground to give up. The Aussie was the best when we look at the growth currencies, and that was because of the better than expected economic news. But I want to point out the Kiwi had terrible economic news, and it still ended up for the week. People are just buying risk on currencies. European currencies weakened slightly. Ankit and I talked before this, and we actually both like the European currencies to the short side. And crypto, look, crypto just got hit. We'll take a look at charts. They had big runs. They pulled back. I don't think it's anything to worry about as far as their long-term trends. Let's take a look at the market, exactly where it is now. Let's give it some scores, and then let's break down each currency one by one. We already looked at the S&P, and the S&P is at a clear +3. There's no question. We are the most bullish we can get. We turned that way. We are at +2 for all of November and early December. We went to +3 in early December, and it's only been up from here. This is a bullish market. We take a look at interest rates. Look at interest rates. This is just incredible. If you told me when we were up here knocking on 5% that we would be below 4% before Christmas, I would have said you're crazy. You're absolutely crazy. This right here is 95% of the reason that the stock market is doing what it's doing, is because bonds are cratering. We take a look at crypto. Look, there's not much we can say here. When we take a look at the big picture, we made a new swing high, we made a pullback, we had a bounce, and the bounce, I can't say it failed because if you take a look, this is an inside candle. What I mean by inside candle is that it is inside the previous candle's high and low. Inside candles don't really tell you any new information. They just tell you it's an inside candle. I don't think this candle is really anything to worry about. Now look, it's not the candle you like to see if you're long cryptos, but again, nothing technically has broken in this chart. And because nothing is technically broken, you have to trade the technicals, which say they're still mildly bullish. Let's talk about the schedule, and there's really only one thing to talk about. Bank of Japan. Ankit and I were talking earlier, and I told Ankit, I think the only thing that's tradable for the rest of the year is yen. Look, I think things are going to move around. They're going to be decent, but I think the yen is the story for the rest of the year. If the Bank of Japan comes out and they don't do something drastic, the market is going to be very disappointed. And that yen rally we've seen, at least half of it will be taken away. If the yen comes through and they do change, understand that there's a lot of juice behind this trade because the Japanese yen has been used for a carry trade, meaning people buy higher paying currencies and pair them against lower pairing currencies, which is the yen. That's starting to unwind. And if people are worried that the yen is going to go higher, that trade has got a lot of money in it and it will unwind. Other than that, I'm looking at this. Typically, we say the core PCE price index is a big deal in the US. I don't think it is anymore. I think everyone is completely convinced that inflation has been beat. I don't even think that the Canadian inflation numbers are really going to be that big of a deal because worldwide inflation is coming down. So if one country is seeing a little bit hotter inflation than everyone else, I think they're going to believe it's just a matter of time before everyone is in the same boat. So I think all of the fireworks are going to be early this week. And plus, we're going into the holiday weekend. I really think by Wednesday, I think you're going to see a pretty dead market by Wednesday afternoon to Wednesday evening. So I'm looking to be more active early in the week for sure. Let's go through currencies. I'm going to break down crypto. Ankit's going to break down what we see in the Forex market. And it's not going to be much different than what I talked about in the currency basket. We saw new highs, we saw pullbacks, and we saw inside candles. That's it. We'll take a look at some of these on a shorter term time frame, but Bitcoin still looks fine. It doesn't look great. It looks fine. Bitcoin Cash looks atrocious. Again, this one doesn't look good. It's down back below moving averages. It's not something you should be touching. Last week I said that I liked Ethereum a little bit better than Bitcoin, and it was not so good. As you can see, this was a little bit more of than an inside candle. We actually did make a lower low this week than we made last week. So if I had to look at just pure relative strength, I'm going to have to go back to Bitcoin being the stronger of the two. And Litecoin, again, I want to touch it. It's not looking good. Bitcoin and Ethereum are really the only playable things in crypto at the moment. Ankit, will you take us through Forex?
Absolutely. Let's just start with the US dollar. I know I had a lot of questions because, we got the Fed out of the way. Question is, okay, where is the dollar heading? I mean, if you take a look at the daily chart, the trend score, I mean, it's pretty clear we're sitting at a -3. For the shorter term, we are making a base. Remember, we are not really rallying, we're making a base. In a trending market, bases are great to go short on or to go long on, depending on the direction. I really like this, the way it's setting up. Early next week, we'll find out what happened with Bank of Japan, and that's really going to set the tone for the dollar as well. Just looking at last year, I remember last year, the December was one of the big month for the Japanese yen. And that's when I think I recall it was about 4% move in the yen basket. It was a huge move. So really what happened with dollar yen will dictate that. If the dollar yen slides further, I think dollar continues to weaken and the breakdown will happen. If on the other hand, take a look at the yen here, and yen is just basing right now. We are above the 20 and the 50-day moving average. I think there's a lot riding on this. What's going to happen with dollar yen? There's one thing clear is that when yen dollar weakens, we are seeing the opposite with the yen. So Monday would be the day. I just checked the last year. I remember there was some movement that Bank of Japan made in December, and dollar yen went down at about 3.8%. That was a massive move. I'm not saying it's going to happen again this year, but I just wanted to point out that this has the potential for a big move, especially if the Bank of Japan does make a change. So there's a lot of things that are not looking good. I think this is the one, surprisingly, looks like it's a buy here. So I will keep it as a buy, and we'll reevaluate on a Monday night. Now, looking at European currencies, and I think this is what I want to talk about, is getting out of the dollar and the yen. I think European currencies looks great for the short side. I know they didn't. None of the central banks made changes, but I mean, take a look at the score. Scoring is weakening, -2 on Swiss franc, and look at the chart on the velocity. It's also going down. So I really want to focus on these currencies as well because they are sitting at a premium. Euro, Swiss franc, yen, and pound. They all did collectively really well in 2023. So I think if there's a correction happening there, we can see that. And I think this is where we can look at those pairings amongst other currencies, even Aussie or CAD or even the Kiwi relatively will be interesting in those pairings. So the euro looks weak as well. Again, look at that. I know we look at the dollar, but this is right beside the dollar. Dollar's at a -3, but euro and pound, they're sitting at -2. And I think this is where I just want to highlight that when you are seeing more currencies on that weaker side, this might not be an all-out downside for the dollar. I think the other currencies can also equally participate in that move down. Even pound looks weak, and remember they're sitting at some good gains. I could anticipate a bit more pullback in these currencies. So all the European currencies, I'm a little bit negative on. Now, when we go into the growth currencies, the CAD was an interesting one this week. I mean, you can see where we have a -2 score, but the velocity was up. It did deviate from the dollar. Usually dollar and the CAD does the same thing. Looking at last year when the dollar rolled, the CAD rolled with it, and they both stayed weak. This week, they deviated from each other. So something we'll focus on next week. But for now, I think CAD is a bit untradeable. The score is good on the velocity, but the trend is just not that strong here. So just be vigilant when you're trading with the CAD. Now, going into the Aussie and Kiwi, and I think this is where we all comes down to, is this where the money can flow into? And I would say reluctantly, yes, but it's not a +3. I know it's showing a +2, but a week like this where markets went up by 2.5% and dollar went down by 1.5%, I would have loved to see the Aussie and Kiwi up 1% or 1.5%. That was not the case. So I don't want to be short on the Aussie and Kiwi because again, if I want to be short outside of the dollar, I have the European currencies. So I think this pairing just hold in here, maybe go up a little bit, but I just want to sort of use the right expectation for this, and it's not a super buy. It's really bullish. It's just mildly bullish. And same thing with the Kiwi. I would say the Kiwi is underperforming a little bit on the Aussie, but they're both in the same category there. Kiwi had some negative data last week, but outside of that, As we go into the January, the focus is going to go back into RB and RBNZ as well. But for now, I think they look okay, but they're just not the best buy. And I think that's where we come down to. We're in the same boat as last week. There's a lot of currencies that we like it on the sell side. What do you buy? And I think that's where the yen can really benefit from this, where if there's a little bit spark or a little bit positivity or a little bit hawkishness, I think then we can really see the money going into yen comparing to everything else. So that's really where we stand.
And I'll just echo that 100%. I do like the yen, and I wish that there was no Bank of Japan this week because I'd like it even more. That Bank of Japan throws a question mark, a wild card in there. But to me, this week's all about yen, and really this week's all about dollar yen. I still think dollar yen is the place to trade. They seem like they are so negatively correlated right now. One goes up, the other goes down. Let's talk about Bitcoin, Ethereum. I'll take a look at these charts here. They are a +3 in a trend score, but when we come over and say, okay, well, what's moving right here, right now? They're not really moving right here, right now. So they're on the board for, okay, we still like these to the upside, but they're not showing me that they're heading up right here, right now. The only thing that's showing strength at the moment is CAD, and I'll just echo exactly what Ankit said. Last week we had the same problem. We were very clear on what to short. Oh, we loved a couple things to go short. What do you go long? Typically, the Aussie Kiwi are the things you go long in situations like this. They're terrible right now. It's really leaving you only the yen. So my hope is that the Bank of Japan comes through and that we can continue to trade the yen on the long side. And then it's just a matter of pairing it up of stuff like euro yen, dollar yen, pound yen. I think these are great trades that I want to take a look at. But as you can tell, it all hinges on the yen going higher. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? So let's pull out dollar yen. Dollar yen has been a fantastic trade, and rarely do I get my dream trade. If you remember last week, we ended the week here on Friday, and we ended the week at like 145 or 144 and a half, somewhere in here. And I came out and said, if I could write the script, we would bounce up to 146. I could take my short there and then it would roll over. That's literally exactly what happened. I got half of my position before the Fed meeting. I took the other half of my position after the Fed meeting. It was a great trade. So again, 145-ish all the way down to 141 and a half. I mean, that's a great tradable move. And if you take a look at this move, there wasn't a lot of chop to it. It was very, very easy to stay in this move because there wasn't a lot of chop. So we go in and we say, okay, well, where's the dollar yen now? And it's doing exactly what we want it to do. The weaker currencies don't bounce, they base. So this is confirming that there isn't really buying coming into the dollar yen. Right now, it's just a tired trade. But there's no one rushing in to take positions. So what happens is these things fall, they go sideways for a while because, again, it's just tired. And then the volume comes back in again and it falls to another level. To me, dollar yen is still the best trade. But I do want to take a look at some of the European crosses against this. And the big question is, what's the better short, the euro or the Swiss franc? And remember, whenever you have that question, you pair them up. What's the better short? Euro or Swiss franc? Now, euro has gone up against Swiss franc over the past week or so, but you can see on Friday the euro went down more than the Swiss franc. So I can take a look at this and say this is a bear rally on euro Swiss franc. And if I was going to trade euro Swiss franc, I would be short euro Swiss franc, which means that I should really be looking at being short euro versus yen. So this is another trade that I'm going to be looking at. And take a look at this. Big breakdown, a little rally, failure, but we haven't broken lows yet. So I'm really looking at this area, this 154 area as the low. How long is it going to take before it breaks through? Who knows? I do know that on Monday night, we're going to have a big announcement. My guess is we'll know by Monday night. But this is another trade I do like to the short side. Ankit, what do you want to take a look at?
Hey, Rob. Yeah, you picked the right one. The euro yen is the one that I was watching along with the pound yen and also the Swiss franc yen. They all kind of look very similar to me. So it really comes down to what's the best mover next week. I think it's going to be yen. And I'm just going to focus accordingly. So I'm not really looking outside as much. Those are the areas that I'm looking at. And, let's just talk about both case scenarios. What if the yen is the best one? Yeah, then we have a lot of currencies to work with. Euro yen, pound yen, dollar yen, they all kind of fall in the same category. So what happens if it's actually the other way? What if the Bank of Japan is the dovish one? I think in that case, we probably see the reversal of this week where dollar might gain and the yen might lose. So I think those are the scenarios that will likely happen, and that's what I'm really focusing on. And outside of that, we can take a look at other pairings. We can also go diversify and take a look at Euro Kiwi or Euro Aussie. When you look at the chart, you realize that they're not the cleanest charts, but they do have movements. So it's just really a matter of, okay, what's performing the best and what's performing the worst. But we have nice setups. I mean, you look at the Euro Kiwi here. We got a nice base setup here, and if it breaks below the support of 174, I can see a further downside. But that will only be the best case scenario if euro is weakening and the Kiwi is strengthening. So if you're looking for a holiday trade, if we see certain currencies do better or that's where the money flows, I think then those are the pairs that we can pay attention to. But outside of that, I think the big focus is really the yen. I'm not too enthusiastic to trade around the holidays. This is a seasonality patterns. The volatility dies down. So let's just be active early part of the week, like Rob said, and then just close the books for the rest of the week. Not really looking to trade actively. I think this was the week where most of the news are out. And now that's behind us. One more next week. And I think after that, it's just going to be really mellow to trade. So that's where we are.
Thanks, Ankit. And I will echo that. I want to make this point very clear. We are heading into what is typically a very low reward environment for trading through the holidays. If it's low reward, you want to be trading less, not more. Remember, last week I said this is a high reward environment. You want to be trading more. And we saw some great trades this week. Great job, everyone. The first part of this week, I think you still have a really good trading environment. I think it's fantastic, actually. But on Wednesday, I think we're going to shift. And then on Wednesday, I think you want to be making less trades, not more. We might be wrong. If so, we'll update that on Friday with our next currency room. But I think that's how you have to look at this rest of the year. That we really have a couple good days left, and then it's going to be holiday trading, which is not great trading. Everyone have a great weekend. Take care. Happy trading. Goodbye, everyone.